Hi everyone, welcome to today's video. So today we are going to discuss the ITC's stock. I had already made a video on this topic a couple of months back, and since the time I had made this video, ITC has given a run up of approximately 25%. If you include dividends also that ITC pays, it's a lot of money that ITC has made over the last few months. At that point in time, there was a lot of negativity around ITC. Memes were coming out. Amrita Rao was saying this, Jal Pilo, this, that, and people were making a lot of fun for ITC. Okay, now ask them what, right? Now they are jumping into buying ITC. So on this video, the point is not for me to gloat or say good things about me, but the objective of this video is very simple, that if you are an investor in ITC, what should you be doing? If you're not an investor, if you're looking to purchase ITC at this juncture, what is it that you should be doing? So we will have an honest 5-point conversation around ITC. So I'll discuss 5 very important points with you. So please watch the video till the very end. And just a very quick funny anecdote. So when I made the video for ITC, my manager, she ended up buying some stocks for ITC. I'll not tell you how many. So she ended up purchasing a few stocks for ITC. And yesterday I was having a conversation with her. And she told me that, and she looked a little bit sad. So I asked her that, hey, what's wrong? So she told me that, Akshat, 25-30% profit on ITC, such a stable stock. I only ended up purchasing 5 stocks. That's it. So she only purchased 5 stocks and she was feeling a little bit dejected that I should have purchased more. I'm telling this to you because when you are getting started in the stock market like my manager, it is completely okay to buy quality stocks in very few quantities just to test out the water. Nothing wrong with it because you will gain confidence with time to buy more and more stuff in a more confident way. Similarly, you will feel confident even when you are having a loss because you would know that things will recover. So that's the principle behind that story. Now let's jump into analyzing the ITC stock. Now first key thing about ITC that you must understand is that there are some very good value unlocking mechanism that is happening in ITC. I had spoken about it in detail on my previous video, but I will quickly summarize it by showing you 2 very important graphs, because if you don't have time to watch that entire video, at least you will understand the most important thing from that video. So let me show you a couple of graphs. So first and foremost, you must understand where ITC's revenues comes from. So if you take a look at FMCG, 26% of revenues for ITC comes from the FMCG business. Now all of us know that ITC has a very big cigarette monopoly, and therefore almost 44% of revenues for ITC comes from selling cigarettes. These are revenues, not profits. So please keep in mind that FMCG and cigarettes are the 2 most important lines for ITC. If these 2 segments for ITC do well, or if investors believe that these 2 sectors or segments for ITC will drive growth in the future, ITC's stock will become rocket. So please keep that in mind. Very important point for our entire conversation. So that is one. Now the second point is that if you take a look at this graph, now this graph is very important, and it says that almost 84% of profit, right? That is what matters the most. Profit matters the most. Of course, sales need to be good. No doubt about that. Sales growth is a very important driver, but importantly, profit should also come. There is no point in growing unprofitably. So if we analyze the profit, almost 84% of ITC's profits come from cigarettes. Therefore, people get super shaky during the budget season because the government keeps on increasing more and more tax. The more tax on cigarettes the government levies, the lower the profits would become for ITC. Why? Because almost 84% of profit for ITC comes from their cigarette line of business. Now second key point is that FMCG, we learned from the previous graph that 26% of ITC's revenues come from FMCG, but this is only contributing 2% to the bottom line. Bottom line means profits. Now this tells you a couple of things. Number one, it tells us that the FMCG business of ITC, it is somewhat being operated in a slightly inefficient or ineffective manner, right? Because the profit margins are only 2% despite 26% contribution in revenues. What does this tells us also? It also points to an opportunity, right? Opportunity, why? Because ITC, if it is able to turn around things for its FMCG business, then the share price will become a rocket. Really, it will become a rocket. Why? Because FMCG is a very important growth driver for ITC. The second growth driver for ITC is the cigarette business. If the taxes on cigarettes are brought down, again ITC's share will become rocket. Now both these things or one of these things need to happen, absolutely need to happen for ITC's stock price to go up in a fundamental manner. So I hope this part is clear because this was one of the key points that I discussed from my earlier video. Again, if you have not watched that video, please go and watch it. Super important video, and then you can come back and watch this video video again for the updates. Now moving on, let me do a very quick fundamental analysis for ITC in conjunction to the points that I just spoke. This is the second key thing that you must remember from this video. So if I take you to my screen, you will see the market share for ITC in its cigarette business is 84%. This is literally a monopoly. If you talk about cigarettes, 84% of market is held by ITC. Very, very big move, because if it happens that the taxes on cigarettes are not increased, forget about decreasing it. If the taxes on cigarettes are not increased, then ITC will exhibit more and more profit. This is a super important point that no one is going to explain it. So as a thought exercise, just pause the video here for a second and try to think, why does this make sense for a company like ITC that even when taxes on cigarettes are not increased, I'm not saying cut down the taxes on cigarettes, but if the taxes on cigarettes do not increase for a half a decade, right? Let's imagine that scenario. Then why is it that ITC will drive more and more profit from its cigarette business? Super important, right? So pause the video and type out your answer, right? It will help me understand that you're getting something useful out of the video. Now, here is the answer. In case you have not typed out your response, please do it. It helps me understand what you're learning from this video, because the objective is for you to pick up things also and implement it. So please do implement it. Very important. Okay. So here is the answer. See, what happens is that technically speaking, taxes on a sin commodity like cigarettes, government should not, or in a normal case scenario, they will not cut down the taxes, right? Because taxes generally speaking will keep on going up, they will stagnate at a particular time. But it's a political suicide if the government starts saying that, you know what, we are going to cut taxes on alcohol and cigarettes. That's really bad, because it's not politically feasible for the governments to do it. Can they absolutely not do it? Yes, they can. They can bring in like farmer debate. They can talk about a lot of things, then cut out the taxes on cigarettes, then cut out the taxes on sin commodities. But generally it will not happen, right? So whatever tax rate we have in India right now, it will at best, it will stay consistent on cigarette, right? Consistent. Now you will say that, okay, Akshat, then why is it that ITC will improve its profits, right? Why is it that they will improve its profits? So the answer there is very simple, because prices of cigarettes also keep on going up. And if the taxes are not rising, but the price of the commodity is rising, then the overall profits will keep on going up, right? So essentially, as long as taxes do not increase proportional to the profits of ITC, the cigarette business will still be massively profitable, right? Now, why am I betting on the fact that the taxes in India on cigarettes are going to stay stagnated or will rise marginally? At least it will not rise in conjunction to the profit rise of ITC. If you do not understand this, just rewind it and watch the last 15 seconds again, right? You will understand what am I saying. Okay, so here is the reason why. So first and foremost, let us look at this particular chart. This is very important. It simply says that the cigarette taxes in India are the highest in the world by far. Okay, it's not even a competition. So, and this is adjusted in terms of per capita GDP. So cigarette taxes in India are the highest in the world. That is point one. Point two, that this change has happened post the GST regime. So post incorporation of the GST, the cigarette taxes have gone up. Now we are in 2021. GST was introduced in July of 2017. It has already been incorporated. ITC, or a stock like ITC, has suffered quite a lot in the last decade because of this increasing tax regime. So right from 2011 to almost 2019, the taxes on cigarettes have gone up and up and up and up. As a result, ITC's stock has also not moved. So let me show you the ITC's graph also. So for example, right, this was like April of 2012, right? It started here, right? And it of course made like up moves and whatnot. And then back in April of 2020, right, we are back to that same 160 rupee mark for ITC again, right? Of course, the stock price went up generally because the profits kept on rising. I'll talk about that in a minute also. But generally speaking, ITC has traded for a long time between that 160 to 190 range, or 160 to 210 range for a significant period of the last decade. Why? Because the taxes in India on cigarettes have been very high, and it has gone up like anything. It has gone up like crazy. So this decade, it is unlikely that the tax rate on cigarettes is going to go up at the same brisk pace. Now, if the tax rates are not going up, therefore a company like ITC will make more profit, and that will further reflect in the stock price. This is the simple commonsensical argument that I would like to make here. Now, very quickly, let me take you through the fundamentals of financials of the stock once. Now, you will see a few key points, and I'll keep referring back to this. So let's analyze the story from 2013. So in 2013, the sales of ITC was approximately 30 crores. Now it is hitting almost 51 crores. So the sales growth has been decent for the size of the company that ITC is. It's not going to double its sales, especially in a falling market like cigarettes, right? So essentially what is happening is that the profits have grown, right? The company is still very profitable. And again, you need to compare the stock price to that 160, 170 level. Why? Because this is the range in which ITC stock has traditionally traded in the last decade. So we are comparing it from that. We are not comparing or holding a company like ITC from a growth potential perspective and keep on giving like 20-30% CAGR. That will not happen with a company like ITC. But is it a good stock at this juncture? That is the question that we are trying to identify. Okay. So coming back, there is no problem in the fundamentals. The sales have gone up. Company is growing profitably. Company pays out a lot of dividend. I get a lot of dividend because I'm a big holder in ITC. Here is my stock portfolio for ITC also. So I keep on getting like dividends throughout the year. So very happy as a shareholder also. Okay. So nothing wrong with the fundamentals of the company per se, right? Now here is an important point. If you take a look at the cash flows for ITC, you will see that, okay, the company's cash flow has remained positive. Since it does not know what to do with the money that it is getting in hand, it returns a large part of that money to its investors back in the form of dividends. So when people say that, hey, why is ITC paying like so much dividend? The reason is because they have a lot of free cash flow also. And they don't know what to do with that excess capital, right? Now let's talk about the free cash flows for a minute. So you can see that ITC generates positive cash flows and it has been doing it for years. Now, people often say that, hey, ITC pays out like such large dividends. How is it able to do it? The reason is because they have a lot of free cash flows. It does not know what to do with that free cash flow. So all the money it is getting, it returns a big part of it back to its shareholders in the form of dividends, right? So I hope this point is clear. Now, what does this show? This shows that ITC actually has expanded its capacity up to a certain point. So let me draw this out so that you understand this point better. And this is a fairly important point. That, see, this is what is happening, right? That cash flow for ITC is extremely positive. For example, if it is getting, let's say hypothetically speaking, 100 rupees of free cash flow, then it returns a big part of it, let's say 30% of it, to its investors in the form of dividends, right? Dividends. Now it has left with 70 rupees to spend. Now what can it do? It can create like new factories, right? It can expand its product portfolio, right? It can launch new brands. It can acquire new firms. So there's a bunch of things that it can do with this 70 rupees remaining. Now there are companies like Facebook or companies like Google or Amazon. They gave literally close to zero dividends, right? When they are getting 100 rupees, they take all this money and start putting it here, right? In some of the other format. Why? Because companies like Facebook, Google, right, Amazon, they have grown massively in the past. They have figured out that they can use this capital for more productive use. This is the key point here, right? But in ITC's case, they are finding it harder and harder to use this money effectively, right? To keep on generating more and more and more return, right? So the point is that the ROC, return on capital employed, might go down with the coming time. Why? Because ITC is not finding great opportunities in the market right now, and they probably do not know or are holding on cash just to figure out the next moves that they are going to make in the market. Now, different investors are perceiving this point very differently in the market. Now, some investors are backing out of ITC. They say that, you know what, okay, this company does not know how to spend capital effectively. My viewpoint is slightly different here, and this is where I would disagree with majority of the other investors. All of us can be right. We are essentially putting our own money through our own analysis. So my analysis on this situation is the following, and this brings us to the third point that I want to discuss, that why is it that I feel that even from this point, ITC should grow. So the first reason is that its FMCG business should grow. Here is a chart for you which shows the margins in the ITC's FMCG business. Now you can see that in 2010, that is where majority of the ITC's FMCG game started, its margins were minus 10%, right? Over time, this margin has improved. There has been numerous statements by their management team saying that, hey, we are going to focus on our FMCG business. Now they have started focusing on that FMCG business. For example, if you take a look at Classmate, now this is one of the notebook brands. Now kids who go to school, they buy Classmate notebooks. And currently ITC owns 25% of this market. This is somewhat of an FMCG market. Now look at Yippee Noodles, right? 23% market. So the company knows how to grow brands. It's not as if that because ITC only has only 2% profits coming from its FMCG business, it's a horrible company in terms of brand building. No, they have established 2 brands. Going forward, 10 years from now, the company can do this with 10 more brands. So please don't discount ITC as being a very lame player in this game. They know how to play this, they know how to build brands, and from there on, their profitability will improve. Now, my hypothesis is that whatever cash flow they are getting, probably after COVID, in a few years' time, they will start putting this money more to acquiring better firms, building out their portfolio and other productive use. Now, why am I saying it? Very, very simple, because in the last decade, ITC has literally tried to build its FMCG business, get it to a certain level of profitability. Going forward, once they have understood this business and they know that they can be profitable in it, that is the time they might undertake a lot of capital expansion. So this is the bet that I am taking, that I identify at least 2 very good reasons for growth. One is that ITC's FMCG business will grow. Why? Because they have just learned the game over the last 1 decade. Their profit margins are improving and majority of their free cash flows will now get dedicated to FMCG business. Number 2, the taxes on cigarettes are not going to go up massively from this point over the next 1 decade. So therefore, I feel that ITC is a good stock to hold and I am holding it. But there are a few concerns that I would like to highlight here. Concern number 1, if you go to their balance sheet and look at the current asset segment, you will see something very interesting happening. That the current assets have gone down over the last 1 year. What does this indicate? This might indicate that their cash equivalents, the amount of cash that they are holding, that might be low. They might have cut down their inventory. They might have cut down their productive assets, which indicates what? That the company might not be taking capacity expansions at this point in time. Is that a worrying sign? I don't think so. Now, why do I say it? I'll explain that again very, very quickly. See, profits is equal to price times quantity. For example, if you're selling this particular pen, what is the profit that a company will make on this pen? It will be the price times the number of units that it can sell. Now, my assessment is that ITC going forward will play the price game, both in FMCG and cigarette business. Why? Because number 1, from cigarette, they will keep on increasing the price. They do it every year. They will continue to do it. As long as the taxes do not catch up, ITC will make a truckload of cash. No problem there. Second, with FMCG, I have done an analysis of a bunch of stocks, bunch of FMCG stocks. Companies like HUL have increased their FMCG products prices up to 13-14% also. Big opportunity again for ITC to either increase the number of units sold or just play with the price. Probably they don't need that capacity expansion to undergo right now. So I hope this point is clear, that this is a very important point. I feel that ITC is going to play the margin game right now, and even if they play that margin game or increasing the price game well, they will be able to improve their cash flows and profits by a lot. So I hope this point is clear, but of course you can interpret this point in a negative way also, that hey, okay, since ITC is not expanding its capacity, probably it is stuck. It does not know what to do with the money. So of course that's a valid concern. Second concern is regarding the taxes. Taxes are very, very complex to predict. You don't know how the countries are going to react to this. I've given you my logic, but of course the tax estimation can be wrong and ITC can prove to be a double-edged sword. For example, if the Indian government for some reason decides that, you know what, double the taxes for cigarettes, then a stock like ITC is going to fall a lot. It will fall a lot, right? No one can predict that. Is that going to happen? I highly doubt it. Analysis does not tell us that it should happen, because governments are also rational. They do not want to kill industries entirely, because at the end of the day, tobacco, cigarettes, alcohol, they give governments a lot of revenues. We can have a separate moral discussion on that. But from a commerce point of view, governments make a lot of money from these sin products. So the governments are not going to kill this industry. That is my viewpoint. But again, super complex to predict. You need to make your call. Now this brings us to the final section, that if you are a stockholder in ITC, or if you are trying to decide whether to enter or not, what is it that you should be doing? So I have explained you the fundamentals up until this point. So let me explain you a bit of technicals also that will help you make a call whether to enter this at this level or not, right? So let me draw a line here, right? So this is 260 level approximately. There is a very strong resistance, right, on this 260 level. The stock has touched this and gone down multiple times. The stock has touched this and gone down multiple times. Now, ITC is sitting at approximately 260. In fact, it broke 260 on the last trading day also. So, if it breaks this 260 level with a lot of volume, so this is the volume that you can see, and the volume is picking up on a stock like ITC right now. So if it does that, if it hits like 270, 280, then especially in an upswing market, when the market is going up, and if it breaks this 260, 265 barrier decisively with volume, then this stock is likely to go and hit at least like 300, right? Easily, right? From that point of view, that is what technicals tell us. Why? Because this resistance will become its support, and I see this happening. This is my assessment. I can be wrong. Therefore, I am a holder in ITC. If someone is trying to take new positions on ITC, just wait for the breakout with volume to happen. Only then take the position, because it is very likely that right now the ITC will fall. Then it will make a head and shoulder pattern or a cup with handle pattern from here, and it will trace back. So I'm quite okay holding ITC at 260 levels. I am quite hopeful that it will make another big up move from this stage, and then I will try to sell this stock. So I hope you enjoyed the conversation and the discussion. Let me know your thoughts, and I will see you the next time.